Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 18th day of July, 2017, and this is the Daily Report for Gold and Silver. Nice upside surge in gold continues the rally. Now we have 3 consecutive days of pretty sizable moves, and considering over the last 7 trading days we had 6 result in higher closes, we have certainly seen a rally get underway in the precious metals. Gold closing up a little bit over $8 today, closing at $1241.90, traded as high as $1244 before closing just off of the highs today. Silver gained a full percentage point today, closing up about 16 cents to close at 16.26. Of course, we are long both gold and silver. We will discuss our trade and our current targets when we get into our technical studies. So traders, without a question, we have a sizable upside move today in the precious metals markets, specifically gold and silver, with silver outperforming gold by just a little bit. I want to start today's show by looking at a daily chart, standard candlestick format, in which we can see gold moving past strategic price points that I believe are potential areas of resistance, so I'm happy to see the market kind of fly right through them. Of key importance is the 61% retracement at 1240. Now the market closed at 1241.50, had a high of 44, but it has effectively closed above that particular price point. The other thing that we have to note is that we talked about the fact yesterday that we closed slightly above the 200-day moving average, and that is this dashed blue line right here. Well, we had an effective breakout through that area and then through the 61% retracement. Our next level that we're going to have to watch, of course, is the 50-day moving average, currently set at 47. We haven't really challenged that particular price point. And above that, and my initial target for this current trade comes in at around 1262, which is a 38% retracement of this most recent correction. And traders, the next chart that I do want to look at on today's show is a candlestick weekly chart. We can absolutely see this week already forming to be a sizable candle, even though it is only Tuesday. And when we consider a candlestick pattern derived from the most recent activity, say these last 3 candles, this is really a little bit larger than you would like to see for a bullish Harami. And because this particular candle on this week, meaning last week, did not open at or below the close of the prior candle, it cannot be derived or labeled as a piercing line. Has to be called a bullish Harami, and this latest candle is absolutely our confirming candle from that pattern. And traders, silver is acting much in the same way. It is outperforming gold. We have good profits in both our long gold as well as our long silver position. We are currently looking at a weekly silver chart, and it is the story of the candle that is burned twice as bright for half as long. We simply have a scenario in which silver came under much greater pressure than gold on the way down and is far exceeding it in terms of percentage gains on the way up. Very similar candlestick pattern, a bullish Harami, and this week's confirmation on a weekly chart. And traders, we switched over to a daily chart, and really the key difference when looking at a gold and comparing it to silver is the fact that price point is still so far below the 50 and 200-day moving average, first of all. Second of all, we're still effectively in a dead cross with the 200-day moving average above the 50-day moving average in silver. You can see it's starting to hook, and we would want to see that come up and then to hook above the 200. That would put a golden cross scenario in terms of any kind of identification of moving average patterns. We are seeing, of course, this engulfing bullish that came in on Friday's trading activity, the same as what we saw in gold. And so for that reason, my current recommendation is to maintain our current long position in gold, maintain our current long position in silver, Maintain your current stops, but I will be looking to move them up within the next 48 hours. In other markets that we follow, it's all about the dollar. The dollar off almost 0.5% today, closing off 0.45, closing at 94.45. As you know, I am on record looking for the dollar to go to the low 94s. I still think it has a way to go further. Dow also closing lower on the day. S&P in essence closing unchanged, but it is the NASDAQ that closed at a new all-time record high. It's been all about the dollar, and we are looking right now at a simple dollar chart, standard candlestick format. We can certainly identify the fact that we recently had this dead cross that came in towards the end of May, beginning of June. We can see that the market has been slipping through key areas, and as you know, I have been on record looking for the dollar index to go to about 94. It is now at 94.44, so we're getting close to my first target. We have some very good historical data representing a point in which we could find technical support, and below that is 93. My sense is that we will continue to see dollar pressure, and that dollar pressure could take us as low as 94 or as low as 93. And traders, as far as U.S. equities are concerned, we had a lower dollar. We did have the Dow Jones Industrial Average close lower on the day. Standard & Poor's, as we talked about, closed in essence unchanged, but NASDAQ continues to climb, continues to surprise people. We're looking at a weekly chart, and even though this is a very, very small-bodied candlestick, we can clearly see that the NASDAQ has now closed at a new all-time record high today as it closed at 63.44. Incredible move in the NASDAQ composite. And traders, last, I do want to take a quick look at crude oil. Crude oil was in essence unchanged today, up about 11-12 cents, which is a fractional move in crude oil. We are looking at our weekly chart. And as you know from our recent reports, I am looking for crude oil to back off and to trade back as low as 44.40, but I believe it has the real potential to move back to about $41 a barrel over the next couple of months. Traders, as you know, we got into this trade just at the beginning of the week. It was based upon technical indicators, and it's certainly dollar weakness that has propelled gold prices and silver prices dramatically higher over the last 3 trading days, if you count Sunday also. The key right now is that the recent failure by the Republicans to pass or repeal and replace Obamacare has really put into question whether or not this current administration is going to be able to move forth with campaign promises such as tax reform, such as major infrastructure projects, and things to basically ramp up the economy. This Trump rally in equities has been predicated upon the assumption that we would have a tremendous revitalization of business here in the United States, and honestly, without the ability to pass any of the major bills that Trump has presented to Congress and Senate, it puts into question what he can actually accomplish and whether this administration will be bogged down in scandals or if it will be able to get on the ball and actually accomplish what it set out to do. If we see further weakness in the equities markets, we could see a further decline in the dollar. We could also see a continuation of gold in terms of its rally. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.